Hello and welcome to Wake Up and Smell the Profit S&P review for Friday, July 28th, 2023. It's now 5:45 a.m. Central Time. We start off in the S&P 500 daily chart into Mark, looking back to where the D wave started. And you can see yesterday's bar from outer space, but we'll still zoom in a little bit. And that was a huge bearish engulfing bar there. It engulfed the previous 5 bars, maybe even 6 bars. And needless to say that's a bearish candle. And price opened under the combo disqualified sell risk and then ticked a little higher above it and then just fell off the face of the earth. And in another chart where I have the lesser sell risk levels from aggressive variable and variable aggressive sequential and combo, it almost nailed that pretty much for price having a low down here. And price in the pre-market for the S&P 500 at 5:51 a.m. on the 28th is 45.57. So it's recovering nicely. It has a long way to go to get back up to that 4,600 zone. And it's not a long way in price. It is a long way in investor and trader confidence until the Bank of Japan reports their Federal Reserve meeting. And it looks like they have made their announcements, so you can see they're going to keep the bond yield targets allowance band unchanged and conduct their yield curve control with greater flexibility. Then the yield band would be a reference rather than rigid limits. They were having a rigid limit of 4 before, and you can see how it jumped during the night over there in Japan, and it went from 0.440 and now it's at 0.550. And they're going to allow their 10-year yield to rise up to 1%. So what the big deal is that bond investors in Japan will start looking locally in Japan to buy their bond hedging instead of having to come to America and other places around the world to get government low-risk bond purchases to hedge their bet. And while the U.S. 10-year Treasury note has cooled off a bit from going well above 4, it will probably start edging back up there, as there should be some 10-year bond sell-offs over there in Japan, and the Federal Reserve's roll-off of their bond balance sheet is actually increasing. So the daily S&P 500 did close below its cloud conversion line at that level. Here was the close, 45.3741. So even though price in the pre-market is going up, if it turns south during the pre-market and opens below this ongoing demand line and closes below it for end of day, that will become qualified. Same thing with this one down here at this level. And if it does that, it would put the closing price below these propulsion momentum down levels. And if it closes below that, we should get an propulsion up level somewhere up here. And adding the Bollinger Band and Stark bands, you can see that puts the upper Stark band and the upper Bollinger Band close together for some pretty good resistance there, starting at 4605.76, and to the downside the lower Stark band is at that level, and the Bollinger Band and the Channel 3 low are kind of close together there. And we have those aggressive sequential and combo levels here still, 4520.52. And the D-wave upwave 4 will print at a tick lower than this low for the bar on July 12th. And the 61.8 projection for Fibonacci is at 4243.12. So that's well below everything. But like I said in the previous video, if we can print the D-wave upwave 4, that puts D-wave on upwave 5, and we'll get another projection up here somewhere.